Hello and welcome. You're watching First Stick here on News 9. I'm Suyash Maheshwari and with me is Amit Ranjan. We have lots to cover over the next half an hour, but let's get right to the big one. Nifty has scaled a record high in opening trade. We opened gap up and as of 9:38, the new record high stands at about 20,238 mark. We are just currently about 8 points shy of it. As you can see on your screen, Nifty as of 9:30 a.m. is up 0.48% at 20,230 marks, so just about 8 points shy of it. So expect that number to change as the session goes by. We'll talk more on it in just some time, but let's get back to where we left off yesterday and the global setup this morning. Over to you, Amit.
Okay, I'll start with the Asian markets first. The Hang Seng, as we have been following it this morning, has just been on a sort of a fall. It was down 0.25%, and as we speak, it's down around 7%. So Hang Seng is in the red. It was in the green yesterday. The Dow Jones closed in the positive at 1.47%. S&P closed in the positive at 0.38%. Nasdaq was in the negative at 0.23% in the red. Now, the Dow Jones Industrial Average in November hit a new high on reports of basically cooling inflation. That was primarily the reason, and it broke a 3-month losing streak, closing at giving a 8.9% gain in the month of November. Nasdaq was slightly down, but this was basically because investors were cashing in on the big tech stocks.
Yeah, because quite a bit of divergence we are seeing there. Dow Jones is up almost 1.5%, whereas Nasdaq is down 0.23%.
Yeah, so it was basically the investors cashing in on the rally in the big tech stocks. So that is why it is a big on the selling pressure side. S&P also rose 8.9% in November. So a very good month of November, both for the US markets, and I'll come to the European markets. They also had a bumper month. And the stocks 600 closed at 0.5% on a 10-week high. So that was as far as the Western markets go. Now today is a very big day for the Asian markets, you know.
Right.
The China's Xiaxin manufacturing purchasing managers index is coming out. India's PMI data is gonna come out, and so with Japan's. So it is a big day that the markets will be watching as far as Asian markets are concerned.
Right. Now we also have a lot of domestic cues and local factors. Of course, that came out after the market hours, so market perhaps got time to react to it. And the biggest, of course, being the September quarter GDP numbers and the exit poll. Now, India's GDP growth for the September quarter came in at 7.6%. The street was expecting a growth of somewhere about 7% on a year-on-year basis. So a big beat there, and this has prompted brokerages to raise their full year GDP estimates. Now Goldman Sachs has increased India's CY 2023, so the calendar year 2023 growth forecast by 20 basis points to 6.7% from 6.5%, but it has kept the 2024 forecast unchanged at 6.2%. Other brokerages like Citi has raised the target GDP forecast to about 6.7% from 6.2% earlier. Morgan Stanley has also raised it from 6.4 to 6.9% as well. Now, moving on to elections, exit polls are giving 2 states each to BJP and Congress. Now, most exit polls on Thursday predicted an edge for the Congress in Chhattisgarh and Telangana, while forecasting that it is while there be an advantage for BJP in Madhya Pradesh and Rajasthan. In Mizoram, however, almost all polls are predicting a hung house. We also had OPEC Plus meeting yesterday. Now, Saudi Arabia, Russia and other members of OPEC Plus who pump in over 40% of world's oil agreed to a voluntary cut of about 2.2 million barrels per day for the first quarter of 2024. and at least 1.3 million barrels per day of those cuts are from an extension of the voluntary cuts that were placed previously by Saudi and Russia. So in essence, there is only an additional cut of about 900,000 barrels a day, and we had expectations coming in from reports, and delegates were also suggesting that there could be a 2 million barrel per day cut, and that's why we are seeing that the cut, because it was below expectations, oil prices declined. Yesterday oil price was hovering around $80 to $83 a barrel mark, whereas today they are about at $80, down about $2 to $3 for the day. But with that, let's also bring on board Mr. Akshay Bhagwat, Senior Vice President at JM Financial. Sir, good morning. Thank you for joining us here on First Take. Now, we have reclaimed all-time highs. 20,238 is a new all-time high. Can we expect a 400-500 point or sort of Santa Claus rally from here on?
Good morning, Suyash. A cheerful day to start with lifetime highs being conquered by the index. Well, if you look at the lifetime high scenarios, yes, definitely there is more space on the upside for the Nifty index. Just for intraday basis, we are just managed to cross the prior high, which we had seen way back in September, 2 months back. So we are revisiting these levels after 2 months. It's been a fast journey, but since it's been so fast, so volatile, there is a chance that ahead of the actual election outcome, which is due on Monday, there might be slight fluctuations around the levels of 20,200 to 300 odd zone. But the belief is that the Nifty is heading for the upper end of the resistance zone as defined by the options trade, which is roughly around 20,500. So 20,000 is your base, which is pretty clear. A lot of option put writing has been set in at that particular base, both for the weekly and the next expiries going ahead. And now the Nifty is trying to get into uncharted territories, and possibly we look forward to targets of around 2,500 in the near term scenario.
All right, 20,500, right?
Yes.
All right, that's the view. Another 300 points, it seems, on Nifty we can scale perhaps in this rally. And Akshay, what's the view on Bank Nifty? Quite a volatile session we saw yesterday. It was down, moved in a range of about 500 points, ended somewhere in the halfway mark of that range. Today we have, scaled a 3-month high, 2.5-month high actually, the highest level since early October, and we are way past 44,800, moving towards 45,000. What's your view on Bank Nifty?
Well, I think Bank Nifty has to take the lead from here. We are dealing with all-time high levels for the Nifty index, but there is still a lot of room left on the upside for the bank index. It's been a laggard lately, and here I believe that Bank Nifty would catch up and should take the lead ahead of the Nifty index. An inverse head and shoulder breakout has been noted at the levels of 44,200, 300 zone in Bank Nifty. This development is extremely positive in the technical charts. Even on the derivative fronts, you have significant put writing bets placed at the strike of 44,000 for the weeklies and the monthlies. That just sets the tone for a positive outlook. You have the RBI policy due on 8th of December. So all the tick-off marks for a positive move in the bank index. The levels which I look forward to is 46,000. That's for the December series. So that's a huge target, almost near the all-time highs. If you were to look at trading targets, then 45,300 is one level where the Bank Nifty might halt. 45,000 is a psychological resistance that's valid for maybe intraday trades. But broadly, the setup is extremely positive, and you should be preferring to buy Bank Nifty over the Nifty index for the December series as the readings go in on the data front.
Now, shifting focus to individual stocks, one of the stocks on my radar is Poonawalla Fincorp. Now, we saw very big movement in the stock prices. It rose about 6.4% in yesterday's trade, and it's above all the key moving averages. Now, we have seen some bit of a profit booking take place at higher levels in today's trade. The stock is down over 0.5%, but last 5 sessions, the stock has rallied by about 11%. Can we expect more upside from here?
Yeah, Poonawalla Fincorp has been the stocks in the limelight in the last couple of days. If you look at the kind of participations or the volumes, there has been a blowout volumes, especially in yesterday's trading session. A strong breakout above the levels of 397, backed by powerful volumes, just indicate that there is still more upside room in Poonawalla Fincorp. So the target area, which I estimate is roughly around 440, that's the August 23 highs which you saw this stock. So that's the target area you should be looking forward to. Or yes, there is some bit of a profit taking today, but I would look this. I would take this as a opportunity to get into this stock at slight dips. So buy Poonawalla Fincorp 400, 395 are good levels to get into again. Keep targets of 440, 380 is the support base, and a positive outlook is what I would maintain on this stock.
All right.
Good morning, Akshay. I'll drive your attention to another thing that's making the news. The cement industry, Ultratech Cement, has acquired the cement business of Kesoram Industries in a share swap sort of a deal. So they, for every one share, they will be issuing 52 shares of Kesoram at an offer price of 173.15 per share at a 34% premium to Kesoram's last close. Now, when I look at Ultratech, in the last 5 days, it has gained 4.81%, and as we speak, it is the market price is at 9,048 and rising. The stock of Kesoram Industries also in the last 5 days has gone up almost 14%. What do you make of Ultratech and Kesoram at the moment?
Good morning, Amit. This deal, I believe, benefits Kesoram shareholders more than Ultratech Semco. But obviously, this is a positive news. And even first looking at Ultratech, the way the charts are positioned, the way the derivative data stands, you have a strong rollover of over 92% in Ultra Semco. There has been a strong breakout a couple of days back with volumes at the levels of 8,800. The only thing is, because of this deal, you might see a slack period in Ultra Semco because 9,000 area has some bit of a call writing resistance. So a temporary sideways or a time correction is what I expect in Ultra Semco. You might see a dip till 8,900, 8,950. That's a short-term dip which you may expect in Ultra Simco, but the broader chart is positive. December series target works out to around 9,350 to 9,400 with a support base of 8,800. But Kesoram here is the beneficiary. I believe this stock is running on circuit as it stands at 146, and the way this stock should move, it may run on circuits considering this particular deal. There is a strong breakout with this circuit today at 136, and the targets which I potentially see in this stock is roughly near 175 to 180. So there is a lot more potential or a value to unlock in Kesoram Industries over Ultrasemco. I would prefer to go for Kesoram Industries as a buying bet over Ultrasemco if you need to choose between both of them.
Thank you, Akshay. Now, before we let you go, apart from Kesoram, as you have advised, would you give us your picks for the investors today?
Yes. Some stock picks I had picked. Most of all of them are rather on the buy side of trade. The first trade I look at is Maruti, where this stock has been an underperformer in the auto space, which has hogged the limelight in the last few trading sessions. So I believe Maruti has a lot of price to catch up from here. 10,800 is the target I look at in Maruti with a stop loss of 10,540. So that should be your first stock on the watch list. Hindustan Unilever for a defensive bet from the FMCG pack, strong support base set up around 2,500, and the stock launching now to move on the upside. I believe in December series, you might see a target till 2,581 with the positive rolls which the stock has witnessed. 2,524 will be the stop loss on this trade. One more dark horse, which I feel might be IEX, where the stock was up a few days back on news, and this is giving you a re-opportunity around the 140, 42 odd levels. So I would recommend to buy IEX. A strong chart structure here, which promises a target of 155. Keep a stop loss of 139 on this trade. And lastly, Havells would be my another trade which I would recommend. A basing formation, a reversal candidate, a potential target area which works out to around 1357. So Havells would be a buy. Keep a stop loss of 1277. So these are the trades I would recommend to the viewers at the current rate.
Writing is about to list in just
Flair
about a
Writing
moment's time. You can
Industries
see
Limited
visuals from
is
the
now
NSE
officially
of
listed
the
on
opening
the stock
of Flair.
exchanges, and it's a milestone for the company. We are so grateful to our host NSE, the book running lead managers to the issue, our members of the board, our family and friends, well-wishers, our shareholders, and all you viewers out here who took out the time to celebrate this momentous occasion with all of us. Many, many congratulations to the entire team of Flair Writing Industries Limited once again. Come on, the claps must go on for a few more minutes.
All right, Flair, has settled at a price of about 501 in the pre-open on NSE. We'll just have the numbers for you right now, but from the settlement of the pre-opening session, it suggests an upside of about 65% over the issue price of 304 rupees. And the market was expecting a premium of about 25% or so. So a big beat on that front. Listing wise, we'll just get you numbers on that in just a short while from now, but moving on and looking at the markets, Nifty is building on to the morning gains, and we have now rescaled 20,250 mark for the very first time as we speak. Nifty is currently placed above the 20,250 mark, whereas sensex has claimed 67,000 levels. It's up about 271 basis points or so. And Bank Nifty is also holding on to the gains. It's trading above 44,876 mark as we speak. We went up as much as 44,944, the levels we have not seen since early October. And the mid cap and the small cap index, the mid cap index, by the way, has scaled a new lifetime high. It's above 43,000, and as of 10 a.m. this morning, Nifty mid cap was up 0.76% at 43,233 mark. Nifty small cap has also hit a new record high. Between the two, it's trading with more significant gains, up about 0.81% at 14,286 mark. And with that, let's also bring on board Mr. Gaurang Shah, Senior Vice President at GeoJit Financial Services. Hi, Gaurang. All right, Gaurang will join us shortly in some time from now. But the movement we have seen in the markets, Amit, we were trading in a range of about 200 points for the longest of times, 2 to 3 weeks. But, over the last 3-4 sessions, markets have been moving higher, forming higher highs and higher lows. And the overall breadth and the sentiment looks so positive right now, As of 10 a.m., as you can see, Nifty is holding on to the gains, and we have scaled a new record high above the 20,250 mark. And if experts are to believe, the Santa Claus rally could perhaps continue till 20,500 mark. Sensex is also on the rise. Yes.
One would have suspected that it would be a sort of a muted sort of sentiment, considering it's a mixed exit poll.
Yeah.
So, but obviously, there are other factors that are overriding. So, expectations and the GDP numbers probably are looking very good, and the sentiment is therefore looking beyond just the election results.
The GDP numbers, Amit, were certainly hotter than expected, came in at significantly higher, about 60 basis points higher than what the street was expecting. Now, the street was factoring in already a higher number. RBI's expectation was for the September quarter to GDP to grow to be somewhere around 6.5%. Market was factoring in a 7% growth. We came in at 7.6%. So, the expectation was of a higher number, and we exceeded that. So, big exuberance over there. And it also, makes you question what will be RBI stance come December policy meet. Will they turn hawkish or not, right? But we also have Mr. Gaurang Shah of Geojet Financial Services. Let's take him over to that. Sir, GDP numbers came in much ahead of streets' expectations. Me and Amit were just talking about how RBI's policy stance could be going forward. Can we expect them to turn hawkish considering that inflation still lingers?
Thank you, Suyash, and morning to all of you all. So, just looking at 1-2 quarters GDP numbers and then taking a stance whether to be dovish or hawkish, I think it's going to be a little bit challenging. This is what our view is, and our sense is that these GDP numbers have to sustain over a couple of quarters, and then possibly one can review what stance is there is with respect to interest rates change, whether upward or downward. 8th December is the credit policy date, if I'm not mistaken. And the general consensus on the street is that it's going to be a pause for one more time. And the commentary is what the street will be eager to listen into from the Honorable RBI Governor. Rate change, if any, our view is that first calendar quarter, that is Jan, Feb, March 24, you might see a small rate cut coming through if all the data points point towards that kind of a stance. But I think 8th December is going to be one more pause, like we have seen over the last couple of trade policies. And first calendar quarter is what we can expect, provided all the data points are supportive.
India remains the fastest growing major economy in the world with these numbers, even though they are slightly less than the last quarter. But few things that have come along with the numbers is a subpar agricultural performance and benefits of lower commodity prices year on year have basically faded away. The exports have been weaker. Do these pointers worry you? Especially agriculture.
It's not a large worry, let me say this. And the agri output coming below par is purely because of the erratic rainfall that we had this monsoon season. And this was expected. And I think this is what exactly the Honorable Governor also mentioned in his earlier policies. Along with this, I think one needs to keep a focused attention on the crude oil prices as well. Because that affects us to a great extent. We import more than 70-75% of our energy requirement in form of petrol, diesel, LPG, kerosene, etc. But these points that you pointed out, I don't think it's going to be a major worry unless and until you have a huge deficit.
And what do you make of the production cuts? You know, we saw additional production cuts of about 900,000 barrels from OPEC plus, but the oil prices did not react. Rather, they fell by about a couple of dollars on Brent. And as we speak, Brent is about $80 a barrel mark. The biggest overhang, I suppose, was the OPEC plus meeting yesterday. Do you expect the oil prices to perhaps settle going forward?
I think this is a little bit tricky, Suyash, because historically speaking, this time of the year when the winter starts, especially in US and Europe, and as we all know, there are freezing temperatures. And generally this time of the year, the demand for crude oil, goes up from those part of the geographies. But we'll have to wait and watch. Winter is just setting in. So we'll have to see whether the demand pushes up the crude oil prices as we go into a deeper winter. But the reaction that we saw on fallback of the announcement of output cut and a lower trajectory as far as Brent and NYMEX are concerned, I think this is soothing and pleasantly surprising. Generally, the moves are the other way, largely because of the concerns from one of the largest consumption like India is China as far as crude oil imports are concerned. And over there has been a little bit lower demand or numbers. So we'll have to just wait and watch as far as the winter setting in and the demand that comes in from Europe and the rest of the world where there are freezing temperatures.
Gaurang, while we await the PMI numbers today, even for India, apart from Japan, South Korea and China, the results that came in yesterday, the GDP values, one, the manufacturing sector GVA, gross value added, went up 6.3%, up from 5.1% the previous quarter results. Do you think that this is a big positive, or it is something that is just another factor, that a number that has been added, and the PMI is what we should be looking at more?
I think definitely this is good. Both manufacturing and services are going to be in focus as we go into the future. And our sense is that over a longer time horizon, the numbers from these two verticals would look much more stronger and better because of the concentrated effort by the government with respect to vocal for local, make in India, made in India, Atmanirbhar Bharat. And the PLI schemes that have been put in place will encourage both services and more so manufacturing side verticals to fire up at all cylinders. So my sense is that these two numbers will be very keenly watched out.
Now, Gaurang, as we speak, Flair Writing has listed at a premium of about 55%. The share listed at a stock price of about 470 per share versus issue of 304. Much ahead of what the street was expecting, and bumper returns we are seeing from some of these listings. You know, Tata Tech almost tripled investors' wealth, Gandhar doubled investors' wealth. So for long-term investors who were in it for to hold the stocks, hoping to get these stocks and hold it for the long term, but they are seeing such returns, what should they do? Like, should they perhaps book some profit off the table, or maybe because they were long-term buyers, average out?
This is what exactly we discussed, I think, about a week or 10 days back when I was on this program, and you had put forward a question with respect to so many IPOs hitting the street and whether there would be what kind of interest would it generate. So not only did it generate multiple folds of interest in form of subscription, but also the listing was equally stellar, barring, I think, Federal Financial Service, Fed Finance. That listed at a discount, but then it recovered the ground yesterday, if I'm not mistaken. So decent return. We had recommendation on IRIDA as well as Tata Technologies via IPO note, and we had issued a subscribe from a long-term point of view. Now look, yes, these kind of listing gains are always tempting and mouth-watering for retail investors to book out. But look at what kind of allotment you've got. I think the number of shares that retail investors got, depending upon the subscription and the proportionate allotment thereafter, would not be so big. So I don't think you should be in a hurry to book out from these names, because the number of shares that you would have had would have been bare minimum. And it would be prudent because we expect these businesses to do better on fallback of earnings visibility.
Gaurang, I'll drive your attention to another sector which is in the news now. Yesterday, of course, Ultratech took over the cement business of Kesoram Cements. Now, it seems that the big boys in the cement business are getting bigger. Few months ago, Adani had overtaken, Adani's Ambuja had bought Sanghi Cements. Last year, Adani themselves had, in a very $6.4 billion deal, had taken the Indian arm of Holcim. All the cement stocks, and whether it is JK, whether it is Ultratech, ACC, Ambuja, are showing very attractive returns, even if you look at the last 5 days or last one month. What do you make of this sector? Good time to look at it for long term?
Well, to be very honest with you, we've been, as a brokerage house, Geojit Financial Services has been always positive on cement sector, even during the time of monsoon, when the general perception on the street is that the construction activity will slow down, consumption of cement bag will slow down, and month on month offtake of cement bags would look lower. I was looking at some of the data over the last almost 3 years, especially during the monsoon season. And year after year, the offtake of cement bags has not gone down, but it has gone up. And gone are the days when, traditionally you used to feel that monsoon time in construction activity slows down. It is not so. It is equally at par than rest of the year. Point number one, Point number two, the fact that these companies are taking over smaller or rather weaker cement manufacturing players' capacity, it only goes to shows that how robust confidence they have in terms of the consumption and demand going up into the future. There is one more factor to this sector, that there are a lot of entry barriers with respect to new capacities coming up. So you eventually will have to look at smaller, weaker players who are willing to sell out their production capacity. Let me give a disclosure since we are discussing the name Ultratech Cement. We have a positive coverage on this company. It is one of the largest it has one of the largest manufacturing capacities in India. And a couple of things over here. I think state elections are done and dusted. So possibly state level infrastructure will start picking up as and when the new governments are sworn in. And next year you have a big election. Our sense is that because of code of conduct coming into place, there might be a slower run rate from government side infrastructure projects. But real estate is doing well, and so is private capex. I think these two verticals should keep up the demand.
That's Mr. Gaurang Shah for you, sir. Appreciate you joining us here on First Tick.
Thank you.
Thank you. But before we wrap things up, Amit, the markets are holding on to those gains. We are still above 20,250 mark. Just above that, Nifty is at currently 20,253 mark. Sensex has reclaimed 67,400 sort of levels. The Nifty banking pack is on the whole is just a touching distance away from 44,900. So perhaps 45,000, as Akshay Bhagwat said, could be on the cards. And mid cap and the small cap indices are holding on to the morning gains. VIX, the volatility index, has declined, so that perhaps will augur well for the bulls, but currently it sits above the 12 mark. But with that, we have completely run out of time on this edition of First Tick. Keep watching Newstime.